Okay, guys, welcome aboard. It's Trendline FX, and we're going to be looking about the top-down analysis compared with the trendline strategy.
Here guys, back onto the screens, I'm going to show you my explanation of my previous trendline theta strategy before we head on to breaking down the essence of the trendline breakout strategy. So usually I tell you guys that when the market is moving, we could have the market moving in a series of higher high and higher lows, right? So if it's making a higher high, then we look at higher lows. The market will usually like start from the bottom, go up, trade downwards like that, continue up, go down, continue up, and then we can say this market is basically in an uptrend, right? So it's creating what? Higher high, higher low. Where do we see the higher high? Already we can establish here as a low point in the market where it can establish the new high created here. Then we call this another low point, but this low is higher than this one. That's what we call it a higher low. And then we have what? Another higher high. Pretty much sure that most of you are familiar with this, but yeah, just as a refreshing of our knowledge, right? So we can also have the opposite scenario where the market is creating lower highs and lower lows, right? Where it's just making series of lows, right? So here we have what? A low point, a high point here. Then we have another low point here. Then we also have another high point here, but this time lower than this one. That's why we call it a lower high, right? Then we have another lower low. So once we have a lower high, lower low scenario, we can already establish that the market is in a downtrend. And once we have a high high, high low, we can establish that the market is in an uptrend formation. Then I explained to you that when it comes to trend line and net understanding, then you must understand that you cannot just wake up and then draw trends starting from any point at all you want in the market. That's pretty much a rookie behavior, right? Let me explain what I clearly mean. You usually find certain traders play out, let's say the market moves randomly like this, it goes up, comes down like this, goes up, and then they want to start out drawing a trend line. They want a perfect scenario that suits their mind. So you're going to find them usually confused about where to even start drawing the trend. So sometimes they can have the market drawn like this. Some will even have the trend line starting from maybe this point, and then, you know, just basically all around the place, just for it to be able to just suit the understanding of what trend line is. But I explained to you guys that we want to apply some mathematical accuracy here in terms of the reasoning for drawing a trend line. And I told you guys that if you want to think about trend, then you want to think about it as an inception of anything, right? So just like fashion, you say this is the new trend. It started from somewhere, Twitter, this is the new trend, everything. You know, in life, when we say trend, it means that we have a point in which it started. So I said, when you're looking at the trend line, then you want to look at it as that point where the market started downtrending, that inception of that trend. So we have like the market start from here, it goes up like that, retraces a little bit, this does its own thing, and then goes up again, does its own thing, blah blah blah, right? We want to establish the fact that this is the inception of that trend before this whole overall movement went up like this, right? So that way then we can say that, well, we have a point one there. Then we can also go ahead to say, even though we made this series of first high, the market kind of pulled down a little bit. It could be a 50% retracement, 61.8 or 78.6. These are my favorite Fibonacci numbers. If you don't know anything about Fibonacci, then you really want to go down into my videos and have a clear understanding, and then you can be able to clearly follow on what we are saying. But yeah, when we have that kind of a push down and the market pushes up, it establishes itself again as a point 2 in the market. That is the only point that I feel like, not in fact feel like, that is the only point which is required for a trader to establish a trend line, right? Or to point out a trend line in the market. In the sense that we have point 1 here, you connect it onto the wick. So in terms of trend line as well, sometimes traders get confused on how to place the trend line specifically on the market. You get some of them let it run through the candles, you get some of them just haphazardly. No, we're saying point, you know, trends or line. So lines is a connection of 2 points, right? If you know anything about mathematics and then how we draw lines, we connect 2 points to make a line. So our point in the market here now is the tip of the wick. So you want to use the tip of the wick to establish that point, right? So you want to start from a point like here and then connect it to the point 2 and then extend it into the future, because that is when you're looking for a trade setup. Once you extend it into the future, you're waiting some way somehow for the market to visit the third point here, and then once the market visits the third point here, you know what to do already. If you don't know what to do, then it means that you've not watched the trendline video. So go into the videos and watch it. But I will be expecting some sort of a reaction around this range, and then be able to catch the market onto the upside rather than expecting a breakout onto the downside. But we also know scenarios that allows us to not expect a buy trade setup, but perhaps a continuation into the next area of support on the downside or point of least resistance. But when we come to the trend line strategy that I want to show you, you must understand that the market trades in various fashions, right? We'll sometimes have trends that push up or market trends that spaces themselves out, right? Where in the sense that we'll have like an uptrend, push down, goes up like that, push down, and then you can have like that continuous beautiful bounce off like that. But what if we have a scenario where the market is actually trending in a very steep and narrow way, right? Steep and narrow in the sense that it goes up like that, then it pushes down a little bit like that, then it goes up like that, then it pushes down a little bit like that, then it goes up. How are we then going to apply the trend line strategy in being able to point that this is point 1, let me put my point 2 here, and that like that? So you usually have a very steep trend showing like that, and then it's very difficult to be able to continue in the trend in that way. And usually in that kind of scenario, the risk to reward does not even make sense, and the trade becomes extremely scary and risky to take, in the sense that you want to take this trade here because you are taking this trade here, you're putting your stop loss, let's say beneath here, your entry somewhere around here, and then you're expecting that the market should visit the previous high it has created. But the previous high is just not so far away from when it created the third touch. So that way, your risk to reward eventually becomes a 1:1 trade. Just like this, let me explain what I mean clearly. So let's say this is our setup, this is our entry, the market touch on the third line. Now what we do is that we want to use our risk to reward tool because it's a buy trade setup. We put that trade here. We're expecting the market to not trade beneath this range. So let's say this is our stop loss. But for first take profit scenario, which is being prudent as traders, we're expecting the market to visit the previous high it has created, which is just this one. Now what happens is that if you put your stop loss, if you put your take profit here, then you're literally having a 1:1 or even a perhaps even lesser than 1:1 scenario in the market, and that's not usually a kind of a great setup that you want to take, except of course you're trying to scalp that trade or you're extremely confident on that trade, right? So how will you then approach a scenario like that? Which comes to what I'm about to show you. In a scenario like that, I pretty much do my best to even avoid the trade setup as a whole, not necessarily looking to take that trade setup on that steep, narrow, that allows me to have extremely very tight, risk to reward scenario. So let's say the market pushes up like that, it pushes down, goes up, and then it pushes down like that, and then it goes up like that. And then I know that the market is literally moving in a very steep scenario. What then I look out for is that a point in time in the market where eventually that steep movement is going to eventually break and then drop onto the opposite side, which is what I call my trend line breaker strategy. Now it's a strategy that I've backtested for several years and I've used it almost all the time. It plays out according to how I expect, right? But there are some caveats, like I said in the beginning of the video, that I'm going to show you. Once you understand those caveats, then you should be able to also play along with the strategy perfectly. Now, once you have a market moving in the steep direction, you must also understand in this market saying that everything that goes up certainly comes down one way or the other. And then especially with a steep market condition where the market, so we have, when the market is actually moving a very steep trend, we call it an unhealthy trend. And then when the market is spaced out, then we call it a healthy trend. So when the market is actually moving up like this and then drops a little bit, up like that, drop like that, we usually call it unhealthy trend. Why? Because there's about 90% certainty that at a point it's just literally going to lose the whole trend and then push up in the opposite direction. But a healthy trend is where we have like a very proper, continuous movement spaced out and then creating that series of higher high, higher low, and then in those kind of formation you could have the market sustaining that trend for a considerable long period of time. So take that as a caution as well, right? Now let's move to the practical aspect of showing you that example. But before I do that, let me show you the caveats that are meant in terms of understanding how to take advantage of that setup. So I said you want to understand that, okay, this is an unhealthy trend as Kojumi have taught us, right? So when the market pushes down a little bit, goes up, creates that steep movement, goes up a little bit and creates that steep movement and goes up, eventually you have like an unhealthy, very bullish movement, right? Very steep like that, sets itself out in the market, right? Now you can be able to still trace your point 1, point 2, and then you have like a point 3, which you're not willing to even trade, right? The caveat of the trend line breaker strategy, then you want to really wait for the market to trade close to that steep trend line. That is the first caveat. You want to wait for the market to trade close, and it actually does happen in terms of waiting and then for it to actually trade closer to the trend line, right? So most time you have people being anxious and using so many reasons to even trade or short the market earlier than that. But you want to be patient and take the cue from what I'm teaching you, that you're going to have the market, you know, trade along, calm down a little bit like that until finally it comes close to the trend line. Now the second caveat is that you want to look out for that breakout candle. It could be a little bearish candle. In this case, we're looking at a bullish tip movement, which is an unhealthy trend. So we want to look out for a bearish candle going in the opposite direction. So you usually have, like, you know, a sharp push on the downside, right? Let me change the color to black. So a sharp bearish candle push on the downside, something like this. And then once you have that, you know that, okay, now the trend has kind of broken. And then what you want to do next is that you want to establish your setup, which is using the risk to reward tool, knowing that I'm going to set my stop loss at this range, and then you're expecting your take profit could be any of those, you know, points of least resistance. It could be the first standing point here, or perhaps even this one all the way down here. And then you could just have a very great risk to reward trade setup like that. What will happen then is that you'd have this market literally trickle down and continue, and then you would make a lot of profit just shorting the market from this range. I usually like this kind of setup in the short scenario far more than the long scenario anyway, but all of them play out equally, because the example that I'm going to be showing you is the short scenario setup. So let's take the practical aspect quickly, and then let's see if we can wrap up with these lessons. So the example that I'm showing you comes in from New Zealand, from Nasdaq. Right now, this is the scenario we have here. Let me use the replay tool for you to understand clearly what we're talking about. So let's say we establish our points here. Now, what can you see here? You can see that if this market was perhaps trading along this line, then this market was trading in a very steep movement all the way up there, right? You can clearly see that Nasdaq actually started from the bottom, go up, it pulls down a little bit, goes up, it pulls down a little bit, and so on and so forth until its current trading range. So how do you then apply the trend line breakout strategy to take advantage of this? So all you can do is that, obviously I told you that inception of a trend is the beginning of the trend, which is just what we have down here. And then because of its steep nature, we have this market pushing a little bit down like this and then going up. By just going up, following the rules, we can still establish here as 0.1 and then establish here as 0.2. So one way or the other, we are expecting a 0.3. But the point is, we are not even trading the 0.3. What we are looking to the replay to the market keeps trending upwards and then hitting a particular point, which serves usually as a resistance, like we can clearly see here. So that even adds on to the confluence, in the sense that we have a resistance here, a resistance being reached here. More so, we have a steep trend line in the market. Now we are only waiting for the market to trade along this line, and then once we have a strong bearish closure, then we can short this market perhaps all the way down to perhaps these regions, right? So this is how we look at the market when we have a setup like that. So let's see what happens. Yes, clearly we see the market trading along the line, and then we have that bearish candle which eventually closes here. So once we have this, then you want to put your risk to reward tool there, like I've already assigned to you, and then putting your stop loss just right above the range beautifully like that. And then you want to see how eventually the setup plays out. So let's see quickly how the setup plays out. So you can see that the trend line breakout strategy perfectly worked in this scenario per everything that I've taught you, in the sense that we had the market trading sideways until it touched the trend line, and then one way or the other, what happened? We had the trend line breaking out with that solid bearish candle, and the market trickling all the way down. So what you do is that this is that point where you enter the market for a trade setup. This is exactly that point where you start shorting this market, and then you want to short it and make as quick gains as possible, right? You don't really want to hold sometimes this trade all the way down expecting that it's going to come all the way down somewhere like this, right? In this kind of setups, we eventually had Fibonacci also playing out, market structure changing, because yeah, trend line has been broken, structure has been broken. So all you expect the market creating a lower high and then continuing with a lower low scenario. So I thought there is in a free session that I held. That is why you also must also click in the link in the description to join the Forex Telegram community, and then follow me on Instagram, because I organize Instagram live sessions and I organize Zoom sessions for the community members, and I teach this kind of things for them during the week for free. It may not necessarily be a YouTube video. So we created that lower high scenario and then eventually had that lower low, but the whole confluence was from the fact that we had a Fibonacci retracement tapping exactly onto the 78.6 retracement region. Let's see exactly how that also played out in the next week. So yeah, rejecting there and then finally breaking all the way down until we currently have Nasdaq wherever it is now. So yeah, that have taught you the breakout strategy. Let's take one more example and then we'll wrap this whole lessons out, right? So the next example we're taking is from Euro JPY. That's also a very tricky but beautiful example, a same lesson, right? So you can clearly see here, we're not going to waste time, that looking at this, we have had the market trading in that steep unhealthy trend like I've already established to you, and then one way or the other, like we're saying, the market will find itself breaking. So reaching this level, what we observe the market trading onto the sideways until eventually touching this candle. We had a solid bearish closure here, which kind of forms a very important reversal pattern, and right off from that reversal pattern, we have the market trickling all the way down. And as a trader, you want to take your entry just when the market had traded beneath that trend line, and then take a quick scalp or a quick day trade or intraday trade advantage of this point and then exit the market, right? So it's usually very different from the traditional third point looking for a buy setup scenario. But now you have like a steep movement on the upside, you put your trend line there, the market breaks it, and then you make a quick movement on the downside, then you are out.
Basically, that's all